Good morning and welcome to this IFG live event on the future of UK trade policy. 2020 was supposed to be the year that the UK stepped out into the global stage with its independent trade policy. Having left the EU on the 31st of January, the UK can now negotiate new trade agreements, with them able to come into force once we've formally left the transition period. Now, we heard over the last 3 or 4 years about the potential for the UK's trade policy, from the deals waiting to be signed, the potential role in revitalising the WTO and global trade, revitalising global trade more generally. But then came along the worst public health crisis in living memory. Is coronavirus rain on the wedding day for the UK's trade policy, or will it change global trade forever? How should the UK government's trade policy adapt to coronavirus? What are the priorities for the UK in its debutante year? Here to discuss these questions and many, many more, we have got a fantastic panel. We have got Meredith Crowley, international trade economist at the University of Cambridge and senior fellow at UK Interchanging Europe. We've got Pauline Bastardon, former head of global and EU policy at the Freight Transport Association. Hosuk Lee-Makiyama, director of the European Centre for International Political Economy, and Klemens, director of trade policy at the German Chamber of Commerce and former negotiator on the EU-US trade agreement TTIP. Before we dive into questions, some brief housekeeping. This event is on the record. A recording will be available afterwards. Please do tweet along using the hashtag IFGCorona. Please do send in your questions using the chat function, using the Q&A function that you will see on your screen. Please don't feel the need to wait till the end. Just fire them in as and when they come up, and we will try and take questions as we move through. I think that is all. I think this is usually the slot where we talk about what you do in case of a fire alarm, but as you can see, we are already outside the building assembled. I will want to try and start then getting into the detail on the questions, and to start picking the panelists' brain on what we think coronavirus has meant for international trade so far. What can we already tell about the implications that it's having? And Meredith, I wanted to come to you first, if I may, and to start, your view on what we know already about coronavirus's impact on global trade. What can we tell?
So already we know that this is going to have a huge hit on global trade. So the WTO is forecasting a decline in global trade of between 10 and 30%. Unfortunately, that could even end up being a low estimate. We know in the Great Trade Collapse of 2008-2009 that global trade fell 17%, trade on the US fell 20%. And for the UK, when GDP during the financial crisis fell 5%, trade fell 15%. So we know that trade always falls much more than GDP. We know GDP this time around is going to fall around the world in a much more synchronized fashion than in 2008, 2009. And we know that trade falls, at least 2, often 3 times as much as GDP. So this will be quite bad.
Okay, so we can tell then on a kind of aggregate level just the size of the impact potentially likely. Pauline, how is this playing out on a practical level? How well have supply chains, particularly in the UK, adapted so far? We've kind of got past the toilet roll problems, and arguably the food supply's held up pretty well. I mean, what's your take on where things are at a practical level, including things like logistics and kind of prices?
So, disruption started, in fact, at the beginning of February already. So I remember until then, all we were talking about with members involved in international logistics was Brexit preparations to a large extent. And all of a sudden, everything shifted. And of course, because the crisis started to impact China, which is the source of many products that end up in the UK, we could see the disruption pretty much immediately. And we could see that both in terms of production, of course, from China, but also in terms of transport to and from China and the rest of Asia as well. So we saw a reduction in the global container volume of 8.6% in February 2020 compared with February 2019, the previous year. And as a result, and because there weren't that many products to move anymore from China to the UK, we saw a lot of what we call blank sailings, meaning that essentially, services that were supposed to be provided in terms of schedule of maritime crossings were reduced. Some services were just pulled from the schedule. Some stops were cancelled, and we saw in total, I think, since then, around 450 blank sailings. So of course, that's not just for the UK. That's globally, but it's pretty enormous, and obviously a lot of disruptions as a result. So fortunately, the effects weren't too visible at that point because, especially when you're shipping from China, you tend to have big inventories lasting for a few weeks. So there are lots of buffers in place, of course. Even before the crisis, it's quite normal because disruptions are unfortunately relatively common when you come from so far away. I think what we started to see then with the toilet rolls, food, and so on, was that basically consumer buying patterns were changing in the UK. We saw a lot of panic buying, and that's what created a lot of the disruptions. Of course, as the second wave of the crisis, we then saw declining demand in the UK for a number of products. So logistics started to suffer in non-food related sectors in particular. And I think most recently we've seen a huge spike in terms of PPE and health related items. The other factor to take into account is that for certain goods, of course, they're not transported by maritime transport because it would be too slow because it's several weeks. They would be transported traditionally in the belly hold of passenger aircraft. And you can see where this is going, of course, when a lot of passenger flights had to be cancelled overnight. We saw a huge decrease in capacity with companies having to rely on freighters, and we've seen prices in some cases multiplied by 10 from before the crisis and during the crisis. In terms of goods that were coming from a little bit closer, so from continental Europe in particular, we've seen initially a lot of disruptions because of border controls imposed by certain member states, in some cases quarantines for logistics workers as well, including drivers at the very beginning, which meant that things were not as smooth as they would usually be. The situation has improved, but you can still see, of course, that there are difficulties in terms of delays and so on. In terms of the future, I mean, I think everything depends very much on how demand starts to pick up in the UK. And if we see that with the recovery, there's more demand, obviously the economy will be a bit better than the worst forecasts. But if it continues to be slow, I think we're going to continue seeing that kind of things for the foreseeable future.
That's really, really helpful. Hosuk, I wanted to bring you in now, because we've kind of heard the macro level picture from Meredith, and then also the real practical challenges from Pauline. How do you think countries' trade policies have started to adapt to this new environment? Do you think trade policy has already played a role in kind of mitigating some of the impact of coronavirus, or actually exacerbating it?
Well, one thing is very clear. I think it's that trade policy has become perhaps one of the most important tools in a sovereign's toolbox. But at the same time, it does not set the objectives. Trade policy doesn't exist in a vacuum. Basically, the policy space for trade policy is basically what's left after economic policy, fiscal policy, and geopolitical complications of COVID-19, and, well, basically changing business pattern has already taken its huge chunks out of the political capital it's there, which basically means, I think, I follow the same numbers as Meredith, and there are two observations that I would like to add to her observation, which is basically that, first of all, we are looking at the biggest GDP drop since the Second World War, and minus 6.5% for the UK, and that is going to have a major impact in terms of in terms of what kind of policy space that is available to actually do something. And we are looking at an economic output worth $5 trillion that's just been wiped out of the global economy, and we haven't really seen the end yet. There's still a number of uncertainties across the regions. We still don't know what the length of the shutdown is. Most of the estimates that we are looking at is looking at basically everything ending after the shutdowns ending after the summer, the recovery started in Q4. That could be right, that could be wrong, but we are still ignoring the fact that the emerging market is going through a major change, especially considering that social distancing cannot be practiced in places like India or Brazil, as we've seen. There's going to be a debt crunch. There's going to be an adjustment in equity prices. So in all, we know that the COVID-19 has affected resourceful countries like the UK and Italy and Spain and United States and China. We really don't know the exact multiple between global trade and the GDP drop. And here's where I actually agree with Meredith that the shrinking of the trade is going to be considerable, not just because of lack of supplies and transport that we heard about, but it's going to be disproportionately higher for two reasons. Because there's going to be a huge demand contraction. There's going to be less demand in the global system, and people will be fighting for that demand. And which basically means that there's going to be quite a bit of overcapacity, not least in the transport sector we heard about. And also the second reason is that the trade was already at a very low benchmark even before the COVID-19, meaning that actually we had just recovered in 2019 from the global financial crisis. So it took us 9 years to get back to status quo in international trade. Then you can imagine what kind of adjustment we are looking at here. And here's where I would like to get back to the first point, basically, that trade policy is maybe secondary to many of the other disciplines, simply because export-led growth and recovery is simply not going to be on the table. And 2021 is not even a recovery. It's a slow partial return to the previous level of economic activities and trade. And if you look at UK as well as rest of Europe, we are looking at extremely trade dependent economies. UK's trade export dependency is about 30%. Germany and Scandinavia goes even beyond that, about 50%. And a lot of people don't actually know the fact that UK, even countries like UK and France and Italy and Spain, who are not considered to be very exporting-led economies, they have actually an export dependency that is much higher than China or United States or Japan. China is just roughly around 20%, which basically means that we are going to struggle more than many other economies.
Okay, thank you very much for that. Pretty grim ending. Klemens, to bring you into this, what are your members saying to you about the impact so far? And then I'll be interested in your perspective of a lot of people, if we throw this forward, are kind of questioning whether coronavirus will see a kind of increase in protectionism and a move towards self-sufficiency. Is that something that you were expecting, or that you think there's any evidence of?
Yes, good morning. Absolutely. I can only agree with what has been said so far. Looking at our members, we represent all 4 million business and have a network of around 150 chambers around the globe. So that's the perspective I'm going to have, giving you our view right now. We've done a couple of surveys in the last couple of weeks, and they have been showing pretty disastrous results. So I would argue there are two crises here we are talking about. The first is the supply chain crisis that has been elaborated before. We have export controls, we have problems at the borders. Suppliers themselves have problems supplying what they produce. And then the second crisis that adds on to this is the crisis of demand, what has been said before, so global drop in demand. And that, of course, means that the global outlook for economies that depend a lot on trade, for Germany, 1 in 4 jobs actually depends on trades. In industry, it's half of the jobs. So this is not a positive outlook. We have seen in our last surveys that most of the companies expect a decline of their business this year, around 80%. We have 1 in 4 companies that have problems with their suppliers, with their supply chains. So 17% are already looking at how to deal with that. And most are looking at new suppliers in Germany, at least for the German companies. We also have an interesting metric. In Germany, we do the certificates of origin, and they are a quite good indicator in how trade is going. And we've seen a drop of the certificates of origin we issued in some parts of going back to only 60% or less of the normal value. Now most are going up to around 80% again, but I think it's very clear that companies are being hit. I would argue that Corona is mainly accelerating trends that we have seen before, trends like protectionism, trends like regionalization of trade. And I would say most of them, they are structural. So if you look at a lot of political changes around the globe, at the discussion on decoupling, all of this will have impacts on investment decisions of companies, where they want to go, if there will be tariffs, if there will be non-tariff barriers, sanctions, border checks, and all of that. And then, of course, we see a whole new level of market concentration due to all the governments stepping in with their rescue packages. So all in all, there will be a very high market concentration, and especially for the SMEs, it will be a tough environment in the future to navigate in.
Thank you very much. That is very, very helpful. Meredith, just on this point around moving towards protectionism and Klemens' point around kind of accelerating trends, I was just wondering your perspective on whether you think that's the case, but also what are the things that we should be looking out for? What are the signs that will tell us what kind of direction we're moving in the recovery period in terms of global trade and how it's adapting?
With the question of protectionism, I want to draw a distinction between trade protectionism and I think what I would call rise in economic nationalism or sort of pro-economic nationalism policies. And so on the trade protection side, first thing is going back to the global financial crisis. At that time, we did not see the typical rise in import protection that we had seen in sort of the previous 20 or 30 years. So at the start of the global financial crisis, the G20 came together and said, we understand that import restrictions are damaging to economic well-being for everyone, so we'll all refrain from doing that. And they did. And so if we looked at the size of the recession at that time, some work Chad Bown and I did predicted that 14% of EU non-oil imports would be subject to import tariffs. And in fact, only 2% were. Looking at the US, we were predicting 15% of US non-oil imports would be subject to import restrictions. We only saw 1%. So the big takeaway there was economic policymakers seem to get that trade policy restrictions, import restrictions are not beneficial. However, both, around the world, we saw other types of domestic stimulus policies. So a big one was clash for clunkers in automobiles. So trade in your old crummy automobile with a government subsidy, buy a new one. The big thing we see fall in terms of consumption at the time of major recessions is automobiles. So people stop buying washing machines, automobiles, big, expensive consumer durables. So lots of countries around the world had these economic stimulus programs to get auto workers back to work, to get people working in washing machine factories back to work. So I think what we've already seen before COVID hit, when we look at the United States, is there was a huge rise of economic nationalism, bring economic, manufacturing activity back to the US. And so there was this whole line from the Trump administration that we need more automobiles and, washing machines made in the US. So we were already seeing that. They've boosted the rhetoric in the US. They're now saying, oh, it was terrible that our supply chains were extending back to China. And so there's, I think, a lot of support ideologically for the idea that government should somehow be subsidizing or putting other barriers in place to create more domestic production. And I think with COVID, what we've seen so far in terms of the economic nationalism front is when we look at medical supplies and we look at all the export restrictions. We saw these in the EU, we saw these in the US. All of these export restrictions on personal protective gear, ventilators, this is something rather unprecedented in the post-World War II era. I mean, there's been a few episodes in which, say, China at one point had some export restrictions on rare earth metals. Those were eventually removed because there were complaints, but this kind of we're taking care of number one attitude in terms of export policy is new, somewhat worrisome. The EU is still trying to sort out exactly how they're going to manage it because they tried to remove those restrictions across EU members only to place them on exports outside the union, which is, very worrisome for developing countries and others who need that gear. I think what we will see in the short run as we in this coronavirus episode is, although governments are going to be very cash strapped, they're going to want to stimulate demand. And the way they're going to do that is they're going to try to provide, there's different ways they can do it. One, they could just have subsidies on the consumption side so that in Britain, if you want a new car, the government will somehow subsidize the price you pay. The problem with that, if you're a government policymaker, is that you could take that subsidy and buy a car built in another country. And that will be stimulating, employment somewhere else. And so when you're talking about public money, that becomes a little bit more concerning from the policymaker's perspective. From the economic perspective, it's getting the economy going globally. If you instead put subsidies on the production side to get, help the automobile makers, in your own country and make the autos cheaper in that way, you stimulate employment and production in your own economy, but you're not necessarily doing the most cost-effective way. And so that also is sort of this kind of choosing our champions, picking which industries you want to stimulate. And so economically, we generally economists don't recommend the use of these types of industrial subsidies because that type of economic nationalism can actually be more costly overall for public budgets, for consumers. But I think that might be sort of a first step. And one of the, Simon Evenet at the University of St. Gallen has been putting together this database for several years on the use of different types of subsidies by governments and different types of incentives to reshore production. And so I think that's something we might see. The constraint would be with the huge outlays that are going to be needed on the employment side right now, governments might be somewhat constrained in what they can do on industrial policy. But I think that, it's a difficult issue because on the one hand, we do know that big economic stimulus plans can put people back to work. On the other hand, there's this question of, is this the most effective way to use public finances?
So I wanted to go to some of the questions that are flying in through the Q&A. So thank you very much for sending those in, everyone watching. And Hosuk, I was going to come to you, not because you were the one who pointed out that I was on mute. I was already planning to do that. So Rory Smith has got a question saying COVID-19 has fractured some fragile supply chains and confronted developed world societies with how dependent they are on them. Will it lead to a rise in America First style policies that prioritize self-sufficiency over low prices across the developed world?
That's a very good question. I'm sure that other speakers will have a comment on this as well, but I think one of the big changes in COVID-19 is the fact that I mentioned before about the lack of demand leading to lower trade, but fundamentally, there's going to be one country that's going to get back on its feet first and who has the scale and the size that could actually impact the global economy as such. It's basically China. China is going to be out of the tunnel first, simply because it went into the tunnel first. So it goes without saying that it will be out of the tunnel first. And we have already seen some signs of recovery. And I think with the backdrop of the political response that we've seen in the last couple of years, not just by the Trump administration, but also by Europe and much of East Asia, around decoupling strategic sovereignty and also continuing bifurcation, much due to the political risk, is going to continue perhaps in the first phase. But it is inevitable at some point that the demand in China is going to change the way business think. And to be honest, I think we're already there. And the thing is, we are not really seeing onshoring in the data or the early market indicators. What we are actually seeing is the business is diversifying. And if that means they are over-relying on demand in Europe, yes, they are going to channel those resources into China where the demand is. If they have depended on strictly one supplier that is in China, yes, they are going to diversify their risk, which could actually mean both onshoring as well as offshoring. And here's where I think it's going to be a little bit interesting, because China is one of the very few countries that has not put a stimulus package on the table yet. I have a reason to believe it may not put a major stimulus package on the table simply because it's first out of the tunnel, etc. It simply doesn't need to. And I think they're saving up the money for something else. I'm happy to discuss more about this, but to put it bluntly, UK investment in China is just 1% of UK's outward FDI stocks. Much of that is actually half a UK investment is in a zero growth, low prospect area, which is Europe. And another quarter is in United States. So if you compare that, for example, to Germany, who has put almost 15% of its outward FDI into China, it's positive news is that we are not dependent on China opening up, which it is unlikely to do in the coming political cycle. But at the same time, it also means that we are going to see quite a lot of UK business turning their attention to China, at least in the early stages of the recovery, because that's where it's going to start.
Okay, thank you very much. Paulina, I wanted to bring you in on this idea of kind of economic nationalism and supply chains being onshored and becoming more resilient, and get your sense of kind of, when we talk about that, practically, what does it actually mean? And what would that change mean for logistics and supply chains in the UK? And are there any signs that this is starting to happen at all?
So I think it depends very much. It depends very much on the country, and it depends very much on the products and the supply chains. As a whole, I have to stress I've not seen evidence of massive relocation to the UK, and you know, these things take time anyway, so you couldn't really have a massive shift overnight like that. I think what we've seen is diversification also in terms of production. So a lot of production in the UK was shut down, or almost shut down during the crisis because of very low demand, essentially. So then a lot of companies decided to do different things and produce things that were in high demand at the time. So PPE, masks, and so on. Gel to wash your hands, etc. And I think for that, perhaps we'll see more domestic production in the future. But I think there's a factor which explains why China is so dominant. I mean, it's cost. The cost of transport, even when it rises, even when things are not exactly properly balanced because you have a crisis and a capacity shortage in air freight, for instance, and so on. The cost of transport doesn't compensate for the difference in terms of production costs. And so, China is still very attractive simply because you can get a lot more cheap products from China than you would be able to, I think, from the UK. And again, it depends very much on the type of product, and it's difficult to generalize. I think there are certain products, of course, which will be well protected. The ones that are protected by geographical indications. I mean, something like Scotch whiskey, you can't really produce it anywhere else. So, this is, or champagne or whatever, these are things, of course, that where you won't see probably a huge difference because you can't, because they are protected, generally speaking. Other than that, I think costs are going to be maybe one of the limiting factors in terms of you're not going to suddenly see the UK turning back to 19th century and becoming a massively industrial country again. I don't think that's in the cards for the future.
Okay, I think that's a relatively safe prediction. So I want a lot of the questions coming through now around what does this mean for the UK and the UK's policy, which is where I would like to turn to now that we've discussed the kind of the more global picture. And Hosuk, I was going to come to you first on this before coming to you, Klemens, which is, and I guess the question is, if the UK's Trade Secretary, Liz Truss, was to call you up this evening and say, OK, what does all of this mean for our policy? What do we need to do differently? What would your tips be? What would you think this means for UK policy?
Well, I have a bad habit of letting calls from +44 prefix to go to the voicemail, but if I was to pick up if she would be able to understand my very idiosyncratic Scandi, Japanese, continental European accent, I mean, the message I think is pretty clear. We are looking at a very grim period of trade policy looking ahead. As I mentioned, there is no export-led growth for a time being, especially if you're focusing on Europe. And many of the trade negotiations we are going into now are suffering from similar problem as the UK has when it comes to trade deficit. There's less growth to tap into, and there are more defensive measures, and there are going to be more calls for defensive measure. Basically, UK, as well as partners like United States and certain European countries, are suffering from current account deficits. And countries that have major pockets of growth are very reluctant about opening up. They just don't have the political capital to basically open up. We always think about counterparties as a monolith, but even an economy, for example, like China, has a very complex structure in terms of its political stakeholders, and there are very strong voices that is going to oppose opening up for even for a relatively small, I'm doing air quotes, for economy like the UK. And so, which in other terms, which basically means that most countries are going to look at stimulus-led return to growth. And I think for the UK, that's a very poor case. That's not really a fit, considering that UK already have a very, very high debt. And which brings back the question about what can trade policy do? Well, I think recognizing the fact that I think she would hopefully admit that a trade minister is perhaps not the most important minister in a cabinet, and it certainly does not set the objectives, which is most likely set by the finance ministers. And to be fair, I mean, COVID-19 has unearthed quite a lot of problems around the world, and wherever it goes, it has actually amplified existing problems rather than creating them. And I think, in a sense, trade policy is not an exception. Trade policy is not going to actually be able to respond to these changes that COVID-19 brought on in other areas of the economy, including Brexit. But it can bring on and support bigger domestic reforms that COVID-19 will unleash. So which probably means, for example, that trade policy can support but not lead in, for example, domestic digitalization and other means of improving even productivity. It can do certain things in the margin to protect FDIs and making investment in the UK more attractive. And it can also adjust certain over-reliances on certain economies for supply chain security issues that we've discussed. I don't agree that UK companies or European companies go to China for cost reasons, because all the market data seem to suggest that actually China is a medium to high cost economy. For example, in the tech sector, China is actually more expensive than Japan to invest in. So, and we also have to manage the question around relatively low growth prospect that UK has over-invested in, that I mentioned before. And that's going to be a huge challenge. And trade negotiation cannot bring about major large-scale transformation of the UK economy that would actually support these objectives in the extent that public seem to expect in the UK. That's not what trade negotiations do. They can merely support it. And also one thing that I would maybe add is that COVID-19 had basically no impact on the trade institutions. WTO, G7 and G20. Global economic governance, more than ever, is in the hand of those who have fiscal firepower and domestic political capital. UK and Germany, China, United States are not one of them.
Brilliant. Thank you very much. Klemens, I wanted to come to you now with your kind of friendly, neighbourly advice from Germany to the UK in terms of trade policy after Brexit. And there are a couple of questions. So Richard Parker from Gowling has said, what do you think coronavirus means for the UK's negotiating strategy? Will it actually limit our room for manoeuvre in our trade negotiations? And then we have had a question in also asking about the likely impact of coronavirus on the other negotiations, so US and I think Japan, that we're looking to kick off. So what's your reflection on what this means for UK trade policy, and particularly the negotiations underway? But we'll leave the EU for a little bit and come back onto that. So just focus on the rest of the world if we can.
Yes, I would like to come back to the point that Hosuk raised on that trade policy cannot be looked at in isolation. I think that has been true for a very long time, but it has been highlighted during this crisis. I give you a brief example. From Germany, for example, we are a federal country, meaning that all the Bundesländer have the major powers right now. They decide on measures being taken or not. And one of the issues our companies had over the last couple of weeks were the questions of essential business. So basically some countries require business to be deemed essential in order to be open, to have people working there. This is a concept we don't know in Germany. So the German companies who have suppliers abroad, or maybe even their own factories abroad who need these supplies, they of course then need to give the companies abroad a certificate that they are essential business, which we can't issue in Germany, which the Bundesländer, who don't usually doing trade policy, are responsible for. So there are interlinkages that we haven't thought of before that are coming more to the forefront. And then there are also, of course, changes, or let's say, there's, for example, a higher public demand regarding sustainability that will impact consumer preferences. That will have, of course, a close interlinkage with trade policy making all across the globe. So I think from that perspective, I agree with Hosuk that trade policy is not the one policy that will be the one to bring us out of this crisis, but it's an important one. And there we have seen both positive and negative trends. I would say the main benefit that a positive trade policy can bring is deliver the certainty for business, to have, for example, global trade rules set by the WTO that all the countries abide by, or have it on a bilateral basis to have measures that can help protect investment, and also to help companies have this environment to diversify their supply chains, not in, as has been said, not in a way that means that you shift everything from one place to another, but to make sure that you have your value chains in place in a robust manner, in a resilient manner. And Hosuk is absolutely right that China has already moved farther on the crisis than we have. So a lot of our companies are actually now making use of this to use these suppliers to be there to produce which is needed right now. For example, PPE, medical goods, and here we see some positive initiative. We see that many countries have reduced their tariffs on these essential goods that are really important to make sure people don't die, which I would say is a very high priority, and this also has some momentum. So many countries have done that unilaterally. The UK has done that, the EU has done that, other countries have done that, and there is actually now also a group of countries that look into how to use the WTO Pharma Agreement, which is a quite arcane agreement many people don't know about, existence since the 90s. Now there are discussions in how far that agreement, which is limited to only a couple of countries and only to pharmaceutical goods, can be extended to more goods, maybe services, disciplines, and also to more countries. So there are positive initiatives, trade policy-wise, that can help business tackle this crisis, and where the UK, of course, can put into its leverage. Now, looking at the WTO, the situation has been critical for quite a while. We all know that the next trip we were all looking forward to the ministerial conference in Kazakhstan has been cancelled. So no conference this year, meaning that many of the issues that are open regarding, for example, digital trade, they are not being solved this year. A lot of uncertainty. There's a big discussion, for example, on putting tariffs on digital transfers. That shows that there are a lot of countries that are not supporting the global trading system in a way that would be required for global business. So here, I would hope that the UK can play a positive role in convincing other countries to keep the multilateral trading system alive, to also push positive initiatives like investment facilitation negotiations, e-commerce negotiations, a pharma agreement, and other things. And if you allow, at the end, I would say, of course, this crisis shows, as I've said before, a trend to regionalization. You can see it in the discourse in many countries, and also meaning that gravity and geography will be more important. Consumers are asking, why does this apple have to come from the other end of the world? That has been an issue for a smaller part of the population before, but right now, at least looking at Europe and Germany, we see this changing. So I would argue that Europe is a very important trading partner for the UK. It goes both ways, so it would be important to keep it that way.
Good. So on that note, I think it's given the questions, it's hard to avoid the Brexit question for much longer. Meredith, I wanted to bring you in on this first, and there's been some talk that actually, whether it's the deal that the kind of loose arrangement the government's going for, even no deal, actually the impact of coronavirus on the economy and the global trading system means that actually the blow at the end of the year that a lot of people are expecting could be softened as we move from the transition to this new relationship. I mean, do you think that's fair? Do you think that Brexit will just be a rounding error lost in the coronavirus noise if we leave at the end of the year, deal or no deal?
In some sense, yes. Any type of trade disruption is always a bit of a rounding error when we have a major recession. And in this case, we're looking at the largest recession of the modern era. In some ways, we can't even really quantify or compare this to what happened in the 30s because the economy is so different. But we're looking at a massive, massive recession. And so I think that what this means is that if, for example, the UK leaves the EU and there's no trade relationship, meaning that we go to WTO tariffs on both sides and the UK uses its UK global tariff, I think the additional costs that the UK will face from those higher no-deal Brexit tariffs will be obscured by all of the damage generally being caused in the economy by the combination of two shocks. First, this major supply shock in which we've actually had to shut down production, and then the subsequent demand shock that comes when people have huge reductions in their income. And so demand shocks always have much bigger impacts than sort of tariff measures at the border. That said, one of the questions we ask as economists is, when is it that a temporary recession, a temporary shock, so supply shock, a big aggregate demand shock, can permanently change the economy, and when can it have really lasting implications? And I think my deep concern at the moment about Brexit is that if we look at any period between 2013 2016, if we look at the micro data from HMRC, we know that there's about 20,000 UK firms exporting to Europe more than 250,000 pounds sterling per year. And for these firms, if we count the number of detailed 8-digit products they're selling, we're looking at firm product combinations of each year, 2013 to 2016 is when I looked at this. We have between 350 and 400,000 firm products distinctly being sold from the UK to the EU. And this number, 350 to 400,000, comes from, in each year, we have about 80 to 90,000 exits. So these are products that firms were selling in the EU that they just terminated. At the same, so either their customer disappeared, the UK firm shut down, they stopped making that product, something happened. On the other side, though, in each of these years, we have about 100,000 UK firm products being created. So new trade links being formed in individual EU countries. And so what happens when you have this kind of big aggregate demand shock is these customer to customer relationships between a firm in the UK and a firm in the EU, many will disappear, either because the EU firm becomes insolvent and closes, the UK firm becomes insolvent and closes, there's some sort of supply chain issue, they can't make the product, but fundamentally in recessions, we know that there are a lot of exits at the level of the firm. And so the question that worries me right now is, if a Belgian firm goes, bust, how easy is it going to be for a UK firm to find a new partner in Belgium who wants to buy their product? Because any customer firm in Belgium is going to look at, well, if we have a no-deal Brexit, won't my life be much easier if my new relationship and my new supplier is in France or Germany? And so I think that the way the big temporary shock of the recession could materialize into a serious long-term negative consequence for the UK is if these customer-to-customer relationships get severed by the recession, and then at the time when firms are beginning to create new relationships, European firms turn to other continental EU member states to be their new supplier. And I think that's a real worry I have for the future of UK manufacturing. So that's something that's got me worried about what could happen with Brexit. I mean, reality, UK exports everywhere are going to decline. And so the decline in trade is going to be spread out everywhere. The additional decline in trade with Europe will be bad, but not nearly as bad as things like, the complete decimation, or, for overall GDP in the UK, the complete decimation of the restaurant industry, of the tourism industry. These are going to be quite substantial hits overall. And so the losses we have at the border will seem relatively small, but they could become permanent and have really lasting effects.
Pauline, I wanted to bring you in on this, and whether or not for UK logistics, the impact will seem relatively small, because while, as Meredith's looking at the aggregate view, presumably the challenge at the end of the year looks pretty daunting to UK logistics when you pile Brexit on top of this. And we've got a question from Flo, actually, who has asked to what extent you think UK logistics sector will be able to cope with leaving the Brexit transition period on the 31st of December as the industry attempts to recover from coronavirus.
So I think the coronavirus has actually changed things perhaps more tremendously, certainly more visibly for logistics and supply chain practitioners than people might realize. So a lot of people were saying, oh yes, but the industry had years to prepare for Brexit. Well, of course, it was difficult to know exactly what to prepare for because there were very different versions of what the future was going to look like. And even today, I mean, there's still no border operating model in sight. So there's relative visibility as to what processes will be required on the EU side, because of course that's set in EU law and it doesn't really change. And certain adaptations, for instance, for the Dover Strait have been put in place already last year before the no deal deadlines. So that's relatively known. Of course, what's not known at this point, not to the same level of detail, is exactly what will be required on the UK side. And that has changed tremendously. So first, when the threat of no deal was there, we heard that there wouldn't be too much import controls in the UK, that there would be a very lenient approach taken to a lot of things. For instance, sanitary and phytosanitary controls on agri-food products and certain other products. And that, of course, has changed. So in, I think it was February, Michael Gove announced that a completely different strategy was going to be put in place by the UK. And essentially that the same controls and requirements that would be required on export would be required on import as well. Now, that arrived more or less at the same time, as I was explaining at the beginning. People involved in international supply chain movements were already, up to their head underwater because of the situation in China at the beginning, and then the situation in Europe and the UK. So it was not the best of time for people to start preparing for something radically different, to start investing massively in capacities to deal with customs requirements, for instance. And that's why, a lot of associations in the logistics sector, a lot of actors in the logistics sector ask for an extension. It's quite difficult, you will understand, no doubt, at a moment where you face a massive shock and quite probable recession, to say to companies, well, okay, you've had to put a lot of your workforce on furlough, you've had to make people redundant, and yet you still need to find the money and the time to invest in preparing for something that will come at the end of the year, when all they care about right at this minute is surviving and making sure that they can get to the next milestone and survive until the next month, and so on and so on. So in terms of the supply chain disruptions, I've heard, oh, well, it will be relatively similar to what we've seen with the coronavirus. Well, it's actually very different because what we've seen with coronavirus, where production was down at some point, and then it was issues in terms of getting the goods through because of shipping services being cancelled or pulled from the schedule, or capacity in air freights being very tight, that kind of things. But what you'll have, unless companies are well prepared and have all the documentation they need to have, and have done all the formalities they need to go through, they won't be able to come in, and they won't be able to go out and come into the EU either with their products. So that will be much more visible. It's still difficult to know exactly what it's going to look like on the ground because, as I said, we're still waiting for a lot of details. It was interesting to see that quite a lot of details on, for instance, the Irish protocol and how this is going to be implemented were released yesterday. You can see that gradually companies are starting to go back to Brexit planning, but it's very, very difficult in this very, very tight financial context when they don't know if they will survive, what consumer demand is going to look like. And as Meredith was explaining, in some cases don't even know if their supply chain partners are still going to be around by the end of the year.
Brilliant, thank you very much. I'm very conscious of time and questions are still flying in. So I wanted to go to the question from Gwen Buck from Green Alliance, who was the first off the mark, and I apologise for taking a while to get to you, which is a question around the UK government's COVID-19 recovery plan aims to deliver a UK and world economy which is stronger, cleaner, more sustainable and more resilient after this crisis. So her question is, how can we ensure trade policy doesn't put more pressure on unsustainable production and supply chains, which themselves have been linked to zoonotic diseases? Who wants to take that? Hosuk, Klemens, do either of you want to come in? How to ensure trade policy is sustainable after coronavirus? What some of the things the UK government should be thinking about in order to do that and meet their ambitious aim in their recovery target?
Sure, I'll jump in. In a public pandemic situation and a healthcare emergency, as we have seen right now, I think it's very clear that many of the sustainability aspects have been put on second order. I very often bring out, for example, the point about single-use plastics. And although there was a universal consensus against the use of single-use plastics, we have to remember that the single-use plastics are the PPEs that is saving our lives at the moment. So obviously, we are going through a period we are rebalancing some of the aspects where we have been maybe a little bit dogmatic and realizing that there's a lot of gray between going completely sustainable and environmental friendly and where we are right now. So the first point I would put to this is that much of the recovery that we will see in EU will have green pretext, meaning there will be a lot of conversation around green recovery, and I think we will come back to that narrative very quickly, simply because that's where the political capital is. Does that mean that the trade system is going to be sustainable? No, it's going to be actually a better excuse for not just for Europe, but also for much of the world to step away from trade agreements that might threaten countries' current account. And simply because the green pretext will give people reason to step off from negotiations and also limit the gains that your counterparts will get. So yeah, that's basically my take on that.
Okay, brilliant. Thank you very much. Meredith, you wanted to come in on that.
Yeah, I'll just add a couple brief points. The first one is, if you looked at the UK global tariff schedule that they just announced will be the MFN tariffs post participating in the EU, they have brought down tariffs on a number of like green type products. So there's some import tariff reductions for some green products. The other thing, though, is the real big issue here is the institution of carbon VAT taxes. So if you apply value-added taxes to high carbon products, you can then at the border, as you bring in imports, you can apply the same carbon value-added tax to polluting or very high carbon footprint products. That's what the EU has proposed, and that's probably the most sensible way forward. Doug Irwin has a great book on free trade, and one of his examples is this issue that fresh cut flowers that come into Europe from East Africa travel on jets. And so you might think that this would cause them to have a very high carbon footprint because they use jet fuel to get to the final consumer. But when you compare the carbon footprint of these East African jet traveling flowers to those being grown in the Netherlands in hothouses, it's actually that the flowers from East Africa have a lower carbon footprint and are more sustainable. And so we have to be very careful in how we define and create policies that are sort of pro-sustainability. And this is kind of very long and tedious technical process in which we define carbon footprints that incorporate production methods as well as transport methods.
I would just add here that the border tariffs on carbon will need to lead to some kind of simplification. Otherwise, they won't be applicable. We live in a world we can't even figure out where an iPhone is actually made. So, figure out the carbon content is going to be either based on a gross simplification, which will either lead to retaliation or very expensive trade cases at the WTO, or it could just simply lead to a model that is based on, applying ETS, basically carbon trading, so forcing other countries to actually impose the same kind of prices. And that is not going to work for most of the emerging markets or the developing countries. It's not a EU-US question. This is actually EU against the rest of the world.
Okay, excellent. Final question, and I'm very sorry to all of those who've sent in questions that we haven't managed to get to. I wanted to give final question to Klemens, which is one that has come through from Anonymous, which is COVID-19 providing governments and global institutions the opportunity to rethink globalization and make it more sustainable or even more inclusive? Arguably, we haven't had a moment like this since Bretton Woods in 1944. So how big a moment is this likely to be, Klemens, with our final word?
Thanks for this question. I think to every complicated question, there is a very simple and easy answer that is obviously wrong. So I will not try to do that. Yeah, when the winds of change come, some build windmills and others build walls. I think these two types of reactions we are seeing right now, we will continue to see in the future. Looking at the multilateral trading system, I mean, as I've mentioned before, there is a lot of blockade going on. If you just look at, for example, the whole turmoil on the fishery chair last year, so it's very difficult to see how we can get multilaterally forward again. The multilateral system is blocked by not just one country. There are different countries on different levels that seem to prefer, as has been said, room of maneuver, being able to do nationally what they want to do, or at least have the impression of being able to do that. So the political capital to bring forward big initiatives here is quite limited, which is a bad thing. There are good opportunities. We've talked about sustainability. There are other initiatives like an environmental goods agreement that we had nearly finished a short while ago. There are ideas, for example, pushed forward by New Zealand on ending fossil subsidies on a global level. Of course, there are fishery negotiations right now in the WTO to stop subsidies, to stop actually illegal subsidies. So that should actually be an easy one. Alas, we see that it is quite difficult to move forward. So the real alternative, probably it's not the best case, but it's better than nothing, is plurilaterally moving forward and having coalitions that actually not block trade, but see trade as an opportunity, which is not the solution to everything, but at least is able to ensure that we still have free trade after the crisis. And I hope that also with a new Director General being elected soon at the WTO is part of this system and will not be pushed to the side. Because in the end, if you remove global rules for everyone and you don't have rules that are enforceable for everyone, it's the smallest that will suffer most. So the big ones will have their go, and that's why I think that the initiative we have seen, for example, by the EU to bring forward an interim appellate system, the unpronounceable acronym MPIA, is important, and I hope that the UK also will be part of that. There has been rumors of big countries pushing others not to be member of that. I think it's important to show that there is still a wish by most countries to work together and not to isolate themselves. We have seen in the 30s how that will pan out, and that this is not good. So I would argue, yes, there are opportunities, and those in charge of taking decisions, they have to take them. That's their responsibility.
Brilliant. Thank you very much, Klemens. So we've covered a huge amount of ground this morning, from the kind of impact on things like tariffs and soap tariffs all the way up to the big changes for global institutions. Thank you very, very much for watching. Thank you very much to our excellent panel. If you want to listen back to the event because you enjoyed it that much, you can go on our website and our IFG Live page, which has all of our podcasts, so we can listen to more of these kinds of events, and there are many, many more to come over the coming weeks and months. So please do check that out, and I think you can subscribe on your favorite podcast providers as well. All right, well, thank you very much for listening, and we look forward to seeing you at an IFG Live event soon.